What's up traders, welcome back to the channel. If you're new here, this is where I share strategies, tips and breakdowns to help you become a better day trader. Today, we're diving deep into one of the most powerful concepts in trading, price action. If you've ever wondered how professional traders make decisions just by looking at a chart without stacking up indicators everywhere, this is the video for you. Price action is the foundation of trading, and once you understand it, you'll see the market in a completely different way. So grab a notebook because we're going to break it all down step by step, and I'll also show you some practical examples that you can start applying today. So, what exactly is price action? At its core, price action is simply the study of how price moves. It's looking at candlesticks, support and resistance, and market structure to understand what buyers and sellers are doing, without relying on indicators. Think of it like reading a story. Every candle, every wick, every high and low is telling you something. The market is like a conversation between buyers and sellers, and price action is just you listening carefully to what they're saying. The reason traders love price action is because it's raw. It doesn't lag like indicators often do. It's the most direct reflection of supply and demand, and it works across any market, whether you're trading stocks, Forex, futures, or crypto. That's why so many professional traders strip their charts down to nothing but price. The first step in understanding price action is learning to read candlesticks. Candlesticks aren't just pretty red and green bars, they're packed with information. For example, a bullish candle tells us that buyers were in control during that period. A bearish candle shows that sellers had the upper hand. Long wicks? That tells us the market rejected those prices. Buyers or sellers tried to push the market there, but they got rejected. Here's a quick example. Let's say you see a strong bullish candle pushing upward, but it leaves behind a long wick on top. What does that mean? Buyers pushed price up, but sellers stepped in and slammed it back down before the candle closed. That wick is rejection, and it can often signal that momentum is slowing down. Certain patterns, like engulfing candles, pin bars, or inside bars, can give you early clues about where price might be headed next. But here's a tip. Don't get caught up trying to memorize dozens of patterns from a textbook. The real skill is understanding the context. Why did that candle form the way it did? What does it mean in relation to support and resistance? That's where the edge is. Now let's move to support and resistance, which I like to call the backbone of price action trading. Support is simply a level where buyers consistently step in, preventing price from falling lower. Resistance is the opposite, a level where sellers step in, stopping price from going higher. Think of them as floors and ceilings in the market. If price keeps bouncing off a floor, that's support. If it keeps hitting its head on the ceiling, that's resistance. Why do these levels matter so much? Because they represent areas where a lot of orders are sitting. Big institutions, hedge funds, or retail traders like you and me, everyone notices those levels. And when the market comes back to them, the reaction often repeats. Here's a real example. Imagine the price of a stock has bounced off the $100 level 3 times in the past. Next time it comes back to that level, you can bet traders are watching closely. If it rejects again, that's a strong support level. If it breaks through with a big candle, that could be the start of a new move lower. But price action isn't just about candles or levels. It's also about the bigger picture, the overall market structure. In an uptrend, you'll see higher highs and higher lows. Buyers are in control, pushing price upwards step by step. In a downtrend, you'll see lower highs and lower lows. Sellers are in control. Here's where structure becomes powerful. When the pattern changes, imagine an uptrend making higher highs and higher lows. Suddenly, instead of making another higher high, price fails and forms a lower high. That's your first clue momentum is shifting. Then it breaks below the last higher low. That's confirmation of a potential trend reversal. This shift in structure often happens before indicators even catch on. That's why price action traders can spot reversals early and position themselves before the crowd. So how do you put all this together? Let me give you a practical example. Imagine price is in a clear uptrend. It's making higher highs and higher lows. You draw your resistance line at a level where price was rejected hard before. The market comes up to that level again, and this time you spot a bearish engulfing candle forming. Sellers overwhelming buyers right at resistance. Now combine that with structure. The engulfing candle breaks below a recent higher low. That's a strong signal that momentum is shifting. At that moment, price action is screaming at you. Buyers are exhausted, sellers are stepping in. That's where you can look for a short opportunity. Another example, let's say price is falling into a strong support zone where it bounced several times before. Instead of slicing right through, you see a long wick rejection candle, a pin bar, showing that sellers tried to push it down, but buyers aggressively defended the level. That's your clue for a possible bounce. You see how this works? Candles tell the story, levels show you where to look, and structure confirms the direction. That's price action in action, and that's the power of price action. By learning to read candlesticks, support and resistance, and market structure, you can trade with more confidence and clarity. You don't need a chart covered in 5 different indicators to make good trades. Sometimes, less really is more. The best part is, once you train your eyes to see these things, they become second nature. You'll start noticing the story behind every move, and that's when trading starts to feel a lot clearer. So here's my challenge to you. Strip your chart down to just candlesticks this week. Mark a few support and resistance levels, watch how price reacts, and practice reading the structure. You'll be surprised how much you learn by simply watching price. If you enjoyed this breakdown, make sure to smash that like button. It really helps the channel grow. Drop a comment if you want me to cover specific price action setups in the next video. And don't forget to subscribe so you don't miss my weekly trading tips. Thanks for watching, and I'll see you in the next one. Happy trading!